Good morning, afternoon, or evening, ladies and gentlemen. Today is going to be a spectacular one. We have the Fed interest rate decision coming at 2 p.m. UK time, and then we have the FOMC, which is where Jerome Powell is going to deliver a speech and give some forward guidance on, monetary policy moving forwards. It's going to be a very volatile day, and the markets are going to either rally or sell off on the back end of it. Sounds very contradictory and very sort of lame in terms of technical analysis and kind of forward thinking. But I want to discuss a few things. I want to discuss where we're at and where we're potentially moving towards. Now, it's my opinion, and I could be totally wrong, guys. It's just my thoughts. I manage my own capital, and of course, we'll trade these markets based on that. And I'm wrong all the time, but it's still very much my opinion that we are not out of the woods yet, and that we still have lower prices to be had, not just for the cryptocurrency market, the stock market, markets across the board. I think the longer and the higher the interest rates go, the worse things get. I think we are very much centered around that, and until we see a pivot, and we're going to actually discuss a pivot, because I see so many idiots out there talking about a pivot, and they don't actually have any idea what a pivot actually means in terms of monetary policy. Holding interest rates at 4 and above percent is not a pivot. Slowing down interest rates is not a pivot. Not doing an interest rate hike is not a pivot. Reducing the interest rate that has already been set by the central bank is what is meant by a pivot. Undoing monetary policy that has been put in place thus far is the pivot. There are no signs. Yes, I will absolutely accept that there are definitely signs that the Federal Reserve may have to slow down. We're at 4%. This is unprecedented. We know the amount of debt that's involved, and we know that the payments on that debt is getting astronomical and unfathomable, and we're facing systemic risk from a debt default aspect, and we're also facing a real consumer destruction. We showed you yesterday that personal saving rate is at 2008 levels and is set to go lower if this continues. This is why we don't think that we're going to enter a bull market here. Yes, if you saw some sort of a slowing down of rates, then markets may take that and rally, but until we see a reverse in the damage that has been done by rate hikes. What has the effect of rate hikes been thus far on markets? We've seen it. We show you this all the time, and it sounds like Groundhog Day, but it's so important for me to keep you guys on the side of safety. What happens if we're wrong? Well, if we're wrong and markets rally and this is the bull market, we're going to have plenty of time to get back in. I'm not interested in being the first person that gets lucky on calling the bottom. I'm more interested in preserving the capital that I have, that I've worked very, very hard for, and understand the value of that capital and the opportunity that it actually carries with it, and trying to preserve it. In regards to what's the sort of effect of interest rates thus far? We're going to do this again. We do it all the time, but we're going to do it once more. This is the 30-day Fed funds futures. Let's pop Bitcoin on. Let's even pop Dogecoin on for the hell of it. Everyone's talking about Dogecoin at the moment. Let's pop that on as well. And let's put the SPY on. You could even put the housing market on here. Dogecoin, okay, maybe is a bad example because it didn't actually recover from the May sell-off that we saw in the cryptocurrency market. But markets literally topped out when they knew interest rates were going to rise. Interest rates are set to continue to rise. And I'm going to argue that even if interest rates stayed where they were, that's still sucking money out of the markets. We've only had this interest rate for this, interest rates according to the Fed funds 30-day futures are coming in at around about 4.2%. 4 is what they're likely going to get to if they do a 75. There's lots of speculation that if they do a lower interest rate hike, that in actual fact, that's going to allow markets to rally. Potentially. Nobody's ruling out a rally here. It would be very ignorant and stupid of me to suggest that markets are just going to continue to go straight down. I've never once stated that, and we've not stated that from 44K. We've said they're going to be rest periods, there's going to be rallies. The harshest rallies occur in bear markets, even harsher than in bull markets, because people get too over-leveraged, and we've called some of the short squeezes. But for me, even if the Fed came out and did a 0 interest rate hike, that's not a pivot. Yes, it's a contradictory and a kind of diversion of the course that potentially they've set out, but it's not a pivot. A pivot is when they start to undo this. And just to show you this again, this is one thing that you guys need to be paying attention to. When they do undo this, we'll get bullish again. Just like how it was a perfect bottoming signal and markets front ran the sort of reverse of monetary policy that we saw in 2019. You can go back and look at this, look at just how connected markets and the direction that they take is to interest rate hikes. And until we get some sort of a confirmation, and I think we've still got yesterday's draw on, until we get some sort of a confirmation that the Fed are actually going to divert the course that they're on, then, and not just and by divert, I don't mean just stop upping interest rates. If interest rates stay there, go and look at how much public debt has gone up by and how much actual, even federal debt has gone up by. That money has to come from somewhere. Well, they're no longer printing it. So where does it come from? It has to go from one place to another. And people like Adam Smith spoke about this. Liquidity is so crucial to understand liquidity, and it's like water. It goes from one place to another, one vessel to another. And, okay, when they're printing more and more of it, it's why we've seen house prices go and ask your grandparents what they bought their house for and how much it's worth now. That's because there's more money. But when you enter a situation where they've turned the money supply off, largely, there is still a sort of a trickle, if you will. And then not only they turn the money supply off, they've gone, okay, well, instead of that money being here, here, and here, we're now going to make sure that it has to go here because we've upped the interest rates and people have got, talking to the tune of trillions of dollars now has to go back into the refinancing of debt. It's got to come from somewhere. And asset classes is one place as it comes from. It's not just asset classes. It's also, it is largely asset classes. We're also seeing deflation in used cars. We're going to see deflation in likely in food and a number of other things. Even things like oil, gas. I think inflation is going to stay stubbornly high, but I think it's going to come down as a result of money having to go. People having less money. People being less, sort of, what's the word? Flush, if you will, for lack of a better term. And this condition is still the condition that we're under. These are the rules that we are now playing by at this moment in time. Until there is a change in that, until we go back to what I believe they're going to. I think they have to go back to 0 interest rates. I think actually negative interest rates suits a government and a central bank with such a large balance sheet. I think we do return to that, but I don't think the time is yet. And until we see that be the case, I don't know why people are overly bullish at the moment. I can definitely see the scope for a rally. I think markets, again, this is the harshest rallies occur in bear markets. How many rallies have we seen thus far? And on every single one on this channel, even though it's extremely unpopular to say so, we've been saying, look, it can rally as much as it wants, but until the macro conditions changes, this is a bear market. Until we get out of that, there's no reason to suggest that we should be bullish and we should be buying from an investment point of view. And we actually think that there's an opportunity ahead that is still yet to be had. And people say, oh well, everybody's bearish. No, they're not. This is the thing. It's almost even, and I would say actually in many cases from what I've seen from Twitter and YouTube this week, and I'm actually supposed to be on holiday, but I just couldn't resist because today's such an important day. It's actually, I'd say stacked to the bulls right now. And I think that's going to cause some pain. And I think certainly if we do get a rally, I'd say, let's say the Fed come out and they do a 75 basis point, markets go, okay, well, they can't keep doing these 75, so this is probably the last one they get. That's probably quite bullish and deemed bullish, certainly as markets are forward-looking. Maybe you get that rally and that continuation. The problem that I've got is that rally and continuation then may set up, just like this rally set up this down leg, just like this rally set up this down leg, the very next catalyst for continuation to the downside. When you understand markets, you understand how driven it is by margin and just how driven it is by futures and liquidations. and people opening and closing. Open interest is a huge factor in markets. So I'm not ruling out a rally. How could I possibly do that? At the end of the day, I don't know what markets are going to do, and I'm only responsible for my own actions and what I choose to, and how I choose to play them, and have to live with the consequences. But what I am saying is, even if the market does rally today, and this pivot narrative is even fueled further, the issue that I have is it doesn't last forever. In regards to the fact that momentum will die, and the reality of the situation is the Fed is no longer holding you. Okay, so you've jumped out the plane on the pivot narrative, thinking that you got that parachute on your back, which is the Fed. You've gone to pull it, and nothing comes out, because the reality of the situation is you've just jumped out of a plane without a parachute, and there's nothing there to catch you, if that makes sense. So I just wanted to really address that, because it's important for me to kind of ground people. I understand. I feel the FOMO myself, guys. I'm not immune to it. I'm right there with you guys in these markets. I'm just trying to give you guys a bit of perspective on everything. And maybe I am too overly bearish. I don't know. It's just that, and when I say I'm overly bearish, I'm not long-term bearish on crypto. I think crypto is going to literally change the world. It's why I get frustrated when I see Dogecoin at 5th largest cryptocurrency, because I'm going, what about Polkadot? What about Cosmos? What about Cardano? What about Polygon? What about all these amazing cryptocurrencies out there that are seeing real-world adoption, that are actually, developing and pushing this industry in the direction that it needs to go? Yet a meme coin takes all the spotlight based on Elon Musk. Even though Elon Musk actually, not that long ago, who was he with? He was with some rappers or something, and he was saying, I wouldn't put my money in crypto right now. Forget what Elon Musk is saying. As long as he's bought Twitter and has a dog, that's all you need to know. This is the kind of environment that we live. I understand, and being somebody that's been commenting on and watching markets for over 5 years now, commenting on them for 2, 3, 4 years now, I understand why it is so many people get wrecked, including myself. I've made all the mistakes in the book, guys. I am human, and I've probably made more mistakes than most, but it's those mistakes that you learn from. You learn far more. I learn far more from a losing trade than I do a winning one, because then I have to go back and go, okay, I need to check my own bias. Great book from Van Tharp that we're going to keep mentioning, because it really tackles human psychology and just how dangerous it is. So I couldn't help but make a video today. The Fed is expected to raise interest rates by 0.75 of a point, and then signal it could slow the pace. So the longer this goes on, the less reason there is to be bearish, right? It's why it almost kind of, I can understand people going, well, why are you bearish right now? Because, the time to be bearish was when we were at 44k and we were selling, and I missed it when we were at 69k. Well, I still would argue that there is reason to be bearish here, and there is reason until it's almost like you're betting that, or you're refusing to look at everything that's around you and kind of go, okay, well, maybe this is the bottom, because I think it might be. What you think and what the market does are two completely different things. So if the Fed go ahead and do a 75 basis point rate hike, debt becomes a lot more expensive. In my opinion, that means that more money has to come out of other markets and go into the debt markets and the fixed instrument markets. And this is all just a liquidity game. And this is at a time where you haven't got that parachute of the Federal Reserve at your back, because they're not printing money anymore. Markets have just got... Bitcoin has only ever known latsy-daisy monetary policy and, inflation of the monetary supply. And it's priced in the monetary supply. Look at what's happening. This is M1, money supply. This is content that is so important that people get out there. Please share, like, and comment on these videos, because they're not popular, because they're truthful. Most people have built careers up of telling you how bullish they are, and how much of it's like Bitcoin maxis are so trapped in a corner. They've built their entire career of telling you how great Bitcoin is against everything else. The reality is, technology doesn't work like that. It evolves, and now they have nowhere to go. I'm happy to admit that I'm wrong. I was happy to admit at the start of the year that I was wrong and change our bias and act accordingly, and it's paid us to do so. And take whatever criticism comes with that, and you should be totally open and accepting of that as a commentator. But this sort of content you do not find. There's a very few people out there. You've got people like the Market Sniper, who'll tell you what he sees. Very, very few people out there will say this kind of stuff to you because it is very unpopular to say that this industry that we all love, and I love it as well, it is likely to see further downside, but it's not as a result of it being a lame industry or a non-revolutionary industry. It's more as a result of, forgive me guys, phone's ringing. It's more of a result of, the wider stance of things being bleak. So today you're going to get the interest rate rise. It could be 50, maybe it's 25, maybe it's 75. 75 is bad. Even a 25 is bad, even though markets would rally off that. I think the problem with the rally is eventually it runs out of steam and momentum. The hype dies off, just like with potentially what we're seeing in Dogecoin. The hype will die off eventually, and the problem with that is usually it's retail that gets left jumping out the plane without a parachute. And remember, it's not just the Fed that are doing this interest rate rise, it's also the Bank of England. Bank of England set for biggest rate hike in 33 years, but economists expect dovish tilt. So they can be as dovish as they want. It's what they do that matters. And monetary policy has almost become, they almost manage markets by what they say now because people will react so aggressively on it. And everybody's watching it now. I'm, of course, interested in what they say, but I'm also very interested in what they do. And again, they're still upping interest rates until not only they stop upping interest rates, but they reverse them. That's when we get bullish, and that time isn't now. And you guys have to make your own minds up. You have to take this information as exactly that, information, educational content that may help you guys make a decision. Remember, you own your own outcomes. You can also go and take the bullish side of things, whatever other bullish channels are out there, and then come up with your own analysis and decision. Pick your side, make your position. It's dangerous to be sidelined, in my opinion, even though we're all dollars right now. We've been dollars really for months and months and months now. And it's paid us to do so. But eventually, we're going to have to move on from that and go and find something else. But we'll let you guys know on this channel. So make sure you hit that subscribe button and stay tuned. That is all I've got for you in this video. It's going to be a very volatile day. Let's give a prediction. Even though I'm on holiday and can't really watch the charts today, which is why I'm not going to trade this. I also find it very hard to position into FOMC. Potentially, there is definitely the scope for a rally. Certainly, if they come out dovish. In my opinion, 75 basis points is bad. And it's pretty darn bad. And I think that I would estimate that if you get that, markets would sell off. However, we've seen harsh rate hikes actually become a bullish thing because people will go, okay, looking down the road, are they going to be able to keep doing this? The answer is probably not. So this is likely going to be the last one, and we're going to have that, potential rally on the back end of it. My guess is that what we've seen with these FOMC meetings and these CPIs is you usually get rallies and then it retraces, or you usually get dips and then it retraces. Potentially you're going to get something like that. But be careful out there, guys. Remember, from an investment point of view, I don't believe that now is the time to be investing. I could totally be wrong. From a trading point of view, just make sure you properly manage your risk. I'm not going to be trading today. We're not trading this week, actually, simply because I am on holiday spending it with family, and I don't want to have to watch my positions all the time. If as a day trader, you have to be active, in my opinion. That's all I've got for you in this video. If you enjoyed the content, like us, always appreciate it as a comment, and I look forward to seeing each and every one of you in the next YouTube video. Have a wonderful Wednesday, ladies and gentlemen.